So now we're going to talk about debt. Debt is very pervasive in our society. That's different than it was a number of years ago. To your grandparents, to be in debt was to acknowledge that they were either incompetent or irresponsible. Today, that's not the case. Today, we look on the ability to acquire debt as being an endorsement that we're reliable people financially. Um, Not necessarily good. So what is debt? Debt is spending tomorrow's income today. You're borrowing money from someone else to spend money that you won't be earning until tomorrow, till the future, till some next month, next week, or whatever. So you're spending that money today. So debt is really renting money. Think of it as renting a service or renting a room or you're renting money from somebody else so that, so you can use it now. You don't own that money. You're just borrowing it. And in the end, you're going to have to repay it. You're also going to pay rent for having used it. You're going to pay the person for the opportunity of being able to use that money that you didn't yet own. Debt limits our options for the future because when we've already spent some of that money that you're going to earn next month, when you put it on the credit card today, then you don't have that money to spend next month. And so it limits your options in the future. You're using the benefit today, and you will not have that benefit available in the future. Debt presumes on the future too, and this is where it gets risky. James 4, verses 13 and 14 says, "Now listen, you who say today or tomorrow we'll go to this or that city, we'll spend a year there, carry on business and make money, but you don't even know what will happen tomorrow." And so when we say, I'm going to borrow this money now and I'll repay it over the next so many months, we're presuming that we're going to have the income to do so. We're presuming that we'll not have other unusual expenses that will require that income. And so we're presuming that the future will unfold as we expect, and that doesn't always happen. There are a number of dangers associated with debt. Debt may deny God an opportunity to work in our lives. Sometimes God puts us in a tight spot so that we come to kind of to where the end of our resources and we don't know what to do, and then God can provide. And when we use debt, we can reduce our reliance on God. If you have a credit card and you're getting down toward the end of the money and not the end of the month yet, well, you can always just go and put something on the card. And so we're not forced to rely on God in the way that we were in situations where the credit cards and where debt was not available. In those situations, person if it didn't have the money, you couldn't do it. You couldn't buy it. You couldn't get it, whatever. But in our case now, we can. And so we can, in some cases, God has denied the opportunity to work in our lives in ways that are so visible that we recognize them and experience that blessing. We may also interfere with God's authority in our lives because God may be limiting our resources, our financial resources, in order to deter us from doing some things that would not be good for us. But when we have a credit card, we can go and do those things anyway. And so some of God's coercion and encouragement to do the right thing may be lost because we just don't see it, because we have opportunity to use debt. Debt also enables us to fund greed. Greed is not good, and funding greed is not a good thing. But having debt enables us to do that to an extent that we would not be able to do if we did not have access to debt. Debt is also a trap. It's easy to get in, it's hard to get out. Getting that loan is easy. Paying it off, not so much. A few years ago, we were in Maine and we're on a lobster boat and looking at the lobster trap. And the fisherman pointed out that these traps that you've seen, they're kind of an arc shape, arc top and netting and over a cage. And very simple contraption, with 2 rooms in it. But the first one is the net is pulled into kind of a cone so that it's like a funnel. And so when the lobster sees the bait hanging in there, he crawls into this cone. The cone gets smaller as he goes in. He gets to the inside, but he can't get back out again because he can't get back into that funnel, into the small end of it. And debt is somewhat like that. It's broad and easy to get in. When you go to get out of it, it can be very difficult and can limit our standard of living in ways that we might not have envisioned. As debt increases, your standard of living decreases because of the cost of borrowing, paying the interest on that. So that initially, when you're borrowing money, you're living beyond your means. Your standard of living is better than your income would authorize or give you the ability to do. But as the payments start coming due, you've got to repay that, and so now you take that same income that you have, but you can't spend all of it because you have to repay the loan, but you also have to pay the rent, paying the interest on that loan, which means that at the end of the time when you've borrowed the money, you've enjoyed whatever it was you've spent it on, you've repaid it, and you've also paid the interest. You have less money. You've had less money available to spend on other things on yourself than you would have if you had not taken the loan. The difference is the cost of the interest on that loan. Proverbs has something to say about debt too. There's quite a bit to say. In chapter 22, verse 7, it says, "The borrower is servant to the lender." When you borrow money from somebody, you're relinquishing part of the control of your life to that person. That may not seem significant when you're dealing with a bank or whatever, when you're dealing in smaller amounts. But ultimately, if you reach a point where you can't repay that debt, the person or the bank that you borrowed from takes control of your life. They take your assets. They take whatever it is that you had to put up as security for that. On a more personal level, you may have experienced borrowing money from a family member or from a friend, and you may have found that changed the relationship. When you saw that person again, it just wasn't the same. There's something in the way, something had come between you, and that arises when you owe a debt to somebody. What are the dangers of debt? There are a number of dangers. One is the loss of future income. As James said, you're presuming on the future. You're presuming that you're going to have the income in the future to repay that debt. That may not happen. Sometimes things go wrong, and you may find that you don't have that income and that you're in a difficult situation. Debt also is also the risk of default. If you find that you don't have the income, you've lost your job or whatever, or you've just got taken on too much debt and you can't repay it, that's one of the risks. And then, of course, you start to lose big time. Debt can also lead to anxiety. Each of us has a different tolerance level for stress in our lives, and anxiety results from having taken on more debt than you're comfortable with, or than you can handle after circumstances change, is a serious danger, serious cost of debt, a non-financial cost, but a cost nonetheless. And debt can also lead to tension in your marriage. You may have you feel comfortable with taking on more payments. Your wife or your husband may not. And if your spouse is less comfortable than you are, then you've got marriage problems. And you hear that money is the cause of most divorces. Well, money is the thing that people fight over, but it goes on. It's deeper than that. But this is one of the points where that the tension will arise, will come to the surface. If you've taken on more debt than either one of you is comfortable with. So is debt always bad? Debt is always risky. As was pointed out, there are various risks associated with debt, but sometimes it may be worth the risk. But you want to calculate that very carefully, determine that you only take on debt when it is worth the risk. One of those cases that is probably worth the risk is for a house mortgage. You're going to have a place to live all your life. And if you can own it, it's generally is better than just paying rent over the long term. But very few people are going to be able to just put down the cash to buy a house. And you're probably work and scrape hard to get together enough for a down payment, and you're going to borrow most of it. So you're going to have a very large debt against your house, at least for the first part of your life. But it's probably worth the risk. You still have the risks of maybe a loss of income or reduced income and some inability to pay at some tight spots, but it probably is worth the risk once you have secure income, reasonably secure income, and you know where you're going to be living for the next while. Education is another a reason for borrowing that may be worth the risk. Particularly if the education is going to increase your quality of life or increase your future incomes. And so you want to do this carefully. I know a lot of students borrow money just because it's available, and that they may end up with bigger debts to repay down the road than what they had anticipated. And that can be a serious concern in the future. Easy living now and difficulties down the road. Car loan is another thing that you may have to be forced to take on because, again, the cost of a car, you probably will not, at least in earlier parts of your life, be able to just go in and pay cash for it. We'll talk later about how you can get to the point in your life where you can buy a car without a loan. And a business investment. If you want to start a business, you're probably going to need some equipment, some facilities, some working capital, and business investment is riskier because most small businesses do not succeed, and so owning your own business is overrated. It can be done, but don't go into it blindly. Be very careful about what it's going to about your prospects there. Let's talk about a car, because this is something that every one of us is going to buy at some point, or maybe repeatedly throughout our lives. We're going to buy a car. So let's take a look at some, for instance here. Let's say that you're going to buy a car, $15,000 car. We have modest expectations at this point. You'll get the car of your dreams later on in your life. Let's say that you're prepared to spend up to 4 years paying for it, 48 monthly payments. Interest rate, let's say, is 6%. Now, on new cars, you can get lower rates than that are incentives, but we'll assume 6% for the purpose of this illustration. That means your monthly payments will be $352.28 for 48 months. And the total cost of that car then out of your pocket is $16,909. So that $15,000 car has actually cost you $16,900. So that $1,900 that you paid for interest is what it costs you to have that car now, rather than saving the money for 4 years so that you could buy it then without having a loan. Now, you may not have the option of waiting 4 years before you get a car, so you probably will have to buy this car, take this loan, and get by. Now, here's where you can work at getting ahead. You buy this car, you finance it for 48 months, but you buy a car that's going to last you for 6 or 7 or 8 years. And so when you you make the last payment, then the next month you continue to make payments, but you pay them into a savings account, into your own bank account. And so for the next, if you can keep that car for 8 years, 4 years after you made this last payment, you've got $15,000 in the bank, so that the next car you go and buy, you won't have to borrow for, or you may have to borrow part of it. But again, if you take that point, maybe you take an 18-month loan, and for a car that's going to last you for 6 or 8 years, and when you finish making the loan payments, you keep making the payments into your own account, so that you can buy that car and not have to be in debt. Some people will say, well, I'm going to lease a car because the payments are lower. But if you're leasing a car, you're renting for the rest of your life. You'll never get ahead of the game, and generally it's a bad choice. Someone has said that when they leased a car, they were paying truckloads of money to someone else for the privilege of borrowing their car, and they never really had anything to show for it, and generally not the best way to go. So next we're going to talk about gambling in the next segment.